SpaceX and xAI are in discussions to merge ahead of the SpaceX IPO. Meanwhile, Elon is considering merging with Tesla, yet wants to accelerate the IPO timeline while the planets are aligned. In IPO Radar news, OpenAI is raising $100 billion and racing to beat Anthropic to the public markets. Automation Anywhere finds a shortcut, and MrBeast highlights 5 IPO radar companies. Welcome to the Access IPOs podcast, where we explore opportunities to invest in the world's most innovative and disruptive pre-IPO companies. I'm Craig Stevens, founder of Access IPOs. Massive news from SpaceX this week, so let's get right into it. So the first big news story came out Thursday. It was by Echo Wang and Joey Roulette from Reuters. The article is Musk's SpaceX is in merger talks with xAI ahead of the planned IPO. xAI, of course, Elon's AI company. SpaceX, we all know. We've covered it pretty extensively here. So this would be a huge deal if these two companies would merge ahead of the IPO. Elon has talked about the convergence of his companies, how xAI and SpaceX have synergies because xAI needs data centers in space and SpaceX can take them up there. So it says here, under the proposed merger, shares of xAI would be exchanged for shares of SpaceX. And even more telling here is that there's been 2 entities set up in Nevada to facilitate this transaction. So it seems like this is really happening with these 2 entities in Nevada. Of course, it makes sense to do this before either of these companies is public, because then you're facing less scrutiny from the regulators. These corporate filings were set up in Nevada on January 21st. One of them is an LLC. It lists SpaceX Brett Johnson, Chief Financial Officer, as a managing member. Now, SpaceX has invested in xAI already. There was a $2 billion investment last year, and combining these 2 companies could help xAI get ahead in the AI race by having exclusive access to data centers in space where they can build them bigger, cheaper in the long term. It's going to be expensive to get them up there. And the whole idea is based on Starship's capability to cost effectively launch these data center materials into space. And if xAI can do that ahead of the others, that would give it a competitive advantage. Another interesting piece of this is that the stock symbol X is now available. X was the longtime stock symbol of US Steel, the Pittsburgh-based company. It used that stock symbol from April of 1901 through June of 2025. And so you wonder if the availability of that stock symbol might have encouraged Elon to move ahead a bit faster with this IPO so he could reserve that and it would be his stock symbol forever. People have been speculating on that. It could be X, or it could be SEX, or it could be SX as the symbol, but I think X by itself would be the ultimate stock symbol for this company, and it's available for the first time in 124 years. Now, this second story that came out later in the day complicated things quite a bit. From Ed Ludlow, Dinesh Nair, Lauren Grush, and Keel Porter. And this one said SpaceX is considering a potential merger with Tesla, as well as an alternative combination with AI company xAI. According to people familiar with the matter, a sign that Elon is looking for ways to potentially consolidate his businesses and maybe putting feelers out there to figure out what the best way to do it is. It says the firm has discussed the feasibility of a tie-up between SpaceX and Tesla, an idea that some investors are pushing. Separately, they are exploring a tie-up between SpaceX and xAI ahead of the IPO, which we heard earlier in the day from that other report. So it's pretty wild to think that all 3 of these companies could merge together. That seems really complicated, especially with Tesla being a public company. Another thing is that an IPO, the idea of an IPO is to raise funds in this launching event where you go public and you offer shares to the public and they buy into the long-term viability of this company. Also, in one of these reports, it talked about this being a chance to raise $50 billion. I think it's going to be higher than that, especially if they merge with xAI first. There's going to be an opportunity to raise a lot of money. There's a ton of demand for shares of this company. They're throwing that $50 billion out there right now, and that's more than the $29 billion that Saudi Aramco raised years ago, and that was the largest raise ever. At $50 billion, that's a pretty big number, but if you're going to put data centers in space, I think it's going to take a little bit more than $50 billion. So I still think this thing could raise up to $100 billion in the IPO, especially if you combine xAI and SpaceX going into this. xAI is valued at about $250 billion right now. now, give or take. SpaceX is up there around $800 billion. They've talked about SpaceX being a $1.5 trillion IPO. XAI combined with SpaceX could take it up to $2 trillion. I don't know. We'll stick with the $1.5 trillion for now. One thing about this Bloomberg article, Ed Ludlow, one of the reporters on it, he tweeted that SpaceX has considered a potential merger with Tesla as well as an alternative combination with XAI. Investors have pushed for the Tesla option, but nothing is final. So that tells us they're weighing their options, or Elon was weighing his options, and maybe he's come to a decision, and that's why those Nevada corporations have been set up to facilitate the merger, or they're still thinking about it. You can think about this and talk to the lawyers about it and the accountants about it until the cows come home, but if they want to get this thing out the door, a decision has to be made. An XAI SpaceX merger isn't going to happen overnight. It's going to take months for that to complete. A merger with Tesla is probably going to take even longer because of increased scrutiny. There's going to be scrutiny no matter what. That leads us into the third story that came out this week. And this was the biggest story of the week until those other two articles came out. But from the Financial Times, SpaceX weighs a June IPO timed to Planetary Alignment and Elon Musk's birthday. It says here, Elon Musk has proposed timing of SpaceX initial public offering to coincide with a rare planetary alignment and his birthday. His birthday is June 28th. That's on a Sunday, so he's not going to be able to IPO on his birthday. But the rocket maker is targeting a mid-June timeline for its IPO when Jupiter and Venus will appear very close together, known as a conjunction, for the first time in more than 3 years, said 5 people familiar with the matter. On June 8th and June 9th, Jupiter and Venus will be within a little more than 1 degree of each other in the sky. So maybe Elon's just proposing this as something interesting that he wants to set a goal. We know Elon likes to set accelerated timelines and he doesn't always meet them, but you'll still get there faster than if you didn't set that goal. Elon's been known for doing this for years. At one point, he said that a human would be on Mars in 2024. And we know that didn't happen. So he's very aggressive with his timelines, and it seems that way with this IPO. In the last episode, just last week, we talked about a July timeline, and that for that to happen, he would have to have the S1 released to the public in June. Now, if he wants to do it in June, that bumps it up a month. So the S1 would need to come out in May, and that's just 4 months from now. So really running out of time. If you want to throw a merger in there too, it's going to be very difficult. So one of the things to keep in mind here is that there are so many reporters out there vying for information about this deal. And the reason is that when you write about this article, you break big news, people come to your website, they sign up for your newsletter. Like me, if I talk about this, you come to my website, sign up for my newsletter. But with Bloomberg, people are going to be signing up to pay for their services. Same with The Information, which is breaking a lot of news right now, Wall Street Journal. So breaking these news stories means money for these publishers and clout for those reporters. So everyone's vying for just every little piece of information that they can get and to write about it. And so right now, it kind of seems like it's going to be a little tricky to know what the real truth is. And if Elon is just considering different things, that's going to complicate things more because maybe he's asking his lawyers about a Tesla merger or asking the accountants about an XAI merger before, after. So there's a lot of things to weigh here. At some point, we're going to need Elon to come out and say, this is what we're doing. Here's my goal for the timeline, instead of just getting the information through these reports. And it's probably going to come from a tweet. We'll just get a tweet from Elon finally saying what he wants to do. People are resurfacing some old Elon tweets where he says he wants to prioritize Tesla shareholders as the people who can participate in the IPO. I still think that's possible. I'm not sure how that works from a technical perspective, how they can actually determine how long someone's been a Tesla shareholder to give them priority on the IPO. We know that retail access to IPOs is getting more widespread. In fact, this other piece that came out this week, there was an article that says that Robinhood is vying to take a primary role in the distribution of IPO shares for SpaceX. And I thought that was probably some sort of leak from Robinhood to try to get ahead of things. Everyone wants to get a piece of shares, whether you're Goldman Sachs and giving it to your clients or if you're a retail investor on Robinhood. So everyone's going to be vying for these shares just like any IPO. There's 8 of these retail brokers that I talk about. Robinhood is the largest. And I did a query into the AIs to determine how many customers these brokers have. Robinhood has about 27 million customers. E-Trade about 7.5 to 8.5 million. Webull has about 4 million. SoFi has 3 million. TradeStation about 1.5. And Public, which is now getting IPO access, has about a million to 2 million customers. Moomoo has upwards of 800,000 US-based customers. So when you're investing in IPOs, we recommend to people in our community that you have accounts at multiple brokers because you never know who's going to get the most shares. Now, if Robinhood gets the most shares, that's good for Robinhood, but they have the most customers too and the most people requesting shares and the most assets on their platform. So you're going to be vying against the other investors who are all requesting shares. If a smaller broker like a Moomoo or a TradeStation gets a large allocation of IPO shares, you might be able to get a better allocation at one of those because there are fewer customers participating in the IPO compared to how many shares they get. So Robinhood knows they need to get a whole boatload of these SpaceX shares to deliver to their customers, but you can be sure that SoFi and Fidelity and Webull and others are going to be trying to get those shares as well, and they're probably going to get some shares. The big question is, how will they deliver Tesla shareholders shares, just proving that you're a long-term shareholder? Maybe Robinhood can figure out how long someone's been a Tesla shareholder on their platform, but that wouldn't count for long-term shareholders at Schwab or at Vanguard or at Fidelity. No surprise that Vlad Tenev is trying to get ahead of this and trying to play a part, but I hope all the brokers will play a role in getting these shares out. And a big part of that would be SpaceX shares splitting headed into the IPO so that the share price is low enough that there's just billions of shares to go around and there's some sort of mechanism in place to prioritize the Tesla shareholders and then other retail investors who want to participate, and less of a priority going to the wealthiest clients at the large Wall Street banks. This whole thing about Elon wanting to do this quickly, remember, Elon works at a certain speed, but accountants and lawyers and government workers all work at a very different speed. So as much as Elon wants to get this done quickly, there may be some constraints, and if they're merging ahead of time, then there's going to be a lot of paperwork that needs to get done. So optimistic timeline for Elon, about a month faster than what we talked about last week, but take that with a dose of reality. The timing may not be able to happen that quickly. This week was also a very busy week for IPOs. There were 3 IPOs that people in the Patreon community were focused on this week. York Space Systems, YSS was the symbol. Ethos Insurance Company, a symbol LIFE, Life. And a third one called Picpay, PICS. And none of these IPOs really performed well out of the gate. There were some allocations from the various brokers. Fidelity had access to some, SoFi had access to some, Robinhood, and a few of the other brokers. But these IPOs didn't perform out of the gate. One thing to keep in mind when you're investing in IPOs, you don't want to just invest in any IPOs. You want to know about the company and research it before it files for an IPO. If a company files for an IPO and that's the first time you've ever heard of the company, then that to me is a hint that maybe it's not a company worth investing in. You can do your research on any company and find diamonds in the rough out there, but this show focuses more on these big companies that we know about long before their IPO. Keep in mind too that when the IPO window is open, plenty of low and mediocre quality companies come through the pipeline. We want to focus on that top tier, the best in class companies that are IPOing. And the first one we saw this year was Equipment Share. Did very well on its opening because it has a very strong position in its marketplace and it's disrupting a legacy business with technology. So just beware, and I may do a whole episode on this. Just because you can access an IPO doesn't mean we should invest in it. And with more access for retail investors have to be more cautious about which IPOs you're investing in. So I'm going to be implementing more discipline in myself and investing only in these top tier names and generally companies that I have followed for a long time on my IPO Radar List. 2 companies announced this week that they were considering moving forward with an IPO. One was Jersey Mike's Subs, and maybe we've heard of that name, but is that one we want to invest in just because we've heard of Jersey Subs or we've got one down the road? Are their subs so good that you want to invest in that IPO? That was actually a leveraged buyout. It's coming out of private equity. Private equity companies we know are opportunistic with IPOs. They put a bunch of debt on the balance sheet, restructure, and then try to take the company's IPO so they can turn a quick buck. Another one is Ledger. Ledger is the cryptocurrency hardware company where you can store your Bitcoin and other cryptos in cold storage. So Ledger is looking to be about a $4 billion deal. These are just news stories I heard. I have to decide if I'm going to put that on the actual radar list or not. I'm not that excited about them, but maybe retail investors will be, so I'll be doing some research to see if they're worth following between now and into their IPOs. Let's move on to IPO radar news. And speaking of this IPO radar list, I have a new resource on my website. Go to accessipos.com/radar. And I've created this enhanced filter where you can filter through the various type of industries to find the startups that I have written about and that are on the IPO radar list. I've been meaning to do this for a long time because I've written about all these companies and I maintain these web pages when there are news stories that come out. And so I found a way to do it on the website. There's a link in the menu, or go to accessipos.com/radar and kick the tires a little bit. See if you can find some companies you like. There's also a button in there for exited companies. And so the total number of radar companies is the results that come through when there's no filter minus the exited companies. If you click that exited filter, you'll see some companies that we're not really following anymore. They've either IPO'd or been acquired. At some point, I'll probably remove them from the website, but for now, they're there. So check that out, the new radar page on my website. That's the universe of companies that I follow and that I report on here in this segment of the show. And the first story on the IPO radar news this week is OpenAI. We know that Elon and Sam have this rivalry, and people have said that Elon wants to beat Sam's OpenAI to the public markets, and that's one of his motivations for taking SpaceX public so quickly. So a few reports that came out this week. First of all is that OpenAI is raising from Microsoft, Nvidia, and Amazon. And there was an earlier article that said they're raising $30 billion more from SoftBank. SoftBank had committed about $40 billion in funding to OpenAI in 2025. Apparently they've funded that whole amount, and now they're committing to another $30 billion. So putting your money where your mouth is. OpenAI, we know, is burning through cash, and they've got lots of revenue, but they're really burning through a lot of cash, and they need that money. But these private market investors are kind of running thin. And so if you look to episode 34, I did a whole episode on the OpenAI IPO, which I'm fairly convinced isn't going to get here until 2027. IPOs typically take longer than leadership wants them to. And that's because they're moving at government and legal and accounting speed and not startup speed. But after all those fundraising articles came out, there was another story that said that OpenAI is targeting a 2026 Q4 IPO, that they're actually moving forward and trying to make this happen. This came out of the Wall Street Journal, Berber Jin, Corey Drybush, and Kate Clark. And this one is framed as a race to the markets against Anthropic. Anthropic seems to be gaining ground on OpenAI's early lead. OpenAI is a consumer-facing product. It's the #1 app on the App Store right now. I checked it this morning. Claude is Anthropic's product, and the Claude LLM is really good at coding. And so a lot of the coding tools that are built on top of these LLMs are using Claude over OpenAI. Anthropic is also gaining market share in enterprise. So Sam sees Anthropic as a real threat to his business and wants to get out and do this IPO before them. And I do think that either of these companies, if they really push hard, they can get out before the other one. But they're still startups and they're still going through growing pains, and there's a ton of work that needs to be done. This article said that they're laying the groundwork for a public listing in the fourth quarter of this year. It's a $500 billion startup, but some of this fundraising activity could be up as high as $800 billion. They've talked about this IPO being a $1 trillion deal. Says Sam is not very excited about being a CEO someday, but he is excited about the company being a public company, and so are we. We want more of these companies out into the public market so that we can invest for the long term. Doesn't mean we can make money on the IPO on some of these. OpenAI has got some real number problems when you look at their revenue versus their burn rate. But in terms of timing, one of the things I think is interesting about this story is going to tie into the next story about the potential stock symbol for OpenAI. And this next story is about an IPO radar company that's been on my radar for 2, 3, 4 years called Automation Anywhere. Automation Anywhere is a robotics process automation company, RPA. It competes with UiPath, if you've heard of UiPath. Now, there's serious questions about these companies because of how AI is kind of doing the job that they are meant to do for the enterprise. I actually met with UiPath in my old career about robotics process process automation and never got to implement it myself, but it's a way to reduce the amount of repetitive tasks in a corporation, which is exactly what AI is trying to do. So UiPath hasn't been as an attractive an investment, and Automation Anywhere has come down quite a bit. It's now about a $2 billion company. Now, the big story that came out was that Automation Anywhere is looking to merge with a public company called C3.ai. This would effectively take Automation Anywhere public through not a SPAC, because C3.ai is not a special purpose acquisition company. It's just a public company that's operating in the public markets. It IPO'd back in 2020, and C3.ai is led by an absolute legend named Thomas Siebel. Thomas Siebel founded this company in 2009, and it seems like he's looking for an exit here, because in this deal, Automation Anywhere would buy C3.ai and effectively take them public, and it seems like they would take the name and move forward from there as a public Automation Anywhere. Thomas Siebel was the top sales guy at Oracle in the 80s and early 90s. And legend has it, he went to Larry Ellison with this idea about something called customer relationship management. And Larry Ellison said, I don't like that idea. I'm not going to do anything about it. So Thomas Siebel went off and started a company called Siebel Systems. And he essentially created CRM, which is now what Salesforce does for the most part. He built Siebel Systems into a multi-billion-dollar company and ultimately merged back with Oracle in 2006. He went on to found C3.ai in 2009. And now they're looking to do this merger with Automation Anywhere. So the interesting tie-in with the previous story about OpenAI, and maybe this is a motivation for Sam to get this OpenAI deal out the door before Anthropic, is that C3.ai's stock symbol is AI. Purely speculation here, but it is interesting to me that these stories came out in the same week that C3.ai may be going away, including their stock symbol. Automation Anywhere could take that stock symbol and keep it, but it seems like it would be better fit for another company like an OpenAI or Anthropic. So purely speculation here. Maybe that's factoring into this OpenAI timing that they want to secure that AI stock symbol. No timing on a closure of that C3.ai Automation Anywhere deal, but if it happens, that's going to be an exit for Automation Anywhere. And we're not that excited about it. Automation Anywhere, only about a $2 billion company right now, down from where it used to be trading back in the frenzy of 2021. UiPath was able to get out into the public markets back then. Automation Anywhere missed its window, so it's finding this backdoor way to get public in an age of AI, where AI could be replacing companies like this, and software is not doing very well in the public markets because of the threat of AI. Last story of the week is about MrBeast. MrBeast is the biggest YouTuber on the planet. He's an entertainment giant. My kids love this guy. I'm sure you've watched the videos. If you're on YouTube watching me, you've probably seen a MrBeast video. I assure you they are better than mine. But MrBeast did this story about things to feel good about. He's like, there's so much going wrong in the world that I want to do a story about the excitement of future technologies. And in this video, he highlighted 5 Access IPOs radar companies. I was shocked as I was watching this thing, like, oh, I've written about that one. I've written about that one. He covered Neuralink, that's Elon Musk's brain implant computer interface company. Upside Foods, that's a not fake meat. They're actually engineering chicken meat from chicken cells and making real chicken. And MrBeast does a taste test with 2 chicken sandwiches, real versus Upside Foods. That's an IPO radar company. Doesn't get a lot of attention. He also covered Colossal Biosciences. This is the company that is trying to de-extinct the woolly mammoth and the dodo bird and the dire wolf. I've covered this one quite a bit on the show and on my website. The 4th company that MrBeast highlighted was SpaceX, and he went into the SpaceX manufacturing facility, which is one of the biggest buildings in the world, and he was able to look at some of the starships out there. And MrBeast was even able to put a heat shield tile onto one of the starships. He signed it, and they tested it with a blowtorch. So it was very cool to see. He got some really good access to the SpaceX facility. MrBeast tweeted about it. Elon tweeted about it, so it got a lot of attention. And then the last IPO radar company mentioned in the video is Beast Industries. That's MrBeast's private company. He raised money at a $5 billion valuation. A few months ago, if you know Chamath from the All In podcast, Chamath has invested in this Beast Industries and helped him consolidate all of his businesses into one company called Beast Industries. That includes Feastables, that's his chocolate company, and he's working on some sort of fintech company or financial brand or banking brand. We're not really sure. They've mentioned it, but we haven't really heard more about it. And then he's got a media business, certainly on YouTube, but he also does a show on Amazon Prime called Beast Games. My kids love it. We watch it every week. So it's very cool to see the biggest YouTuber in the world, one of the biggest entertainers in the world, highlighting technologies and disruptive companies that we're following here on the channel. Now, I mentioned this video to one guy in my Patreon community, and he was like, "Who's MrBeast?" I thought it was really funny that somebody watches my videos on YouTube and not MrBeast's videos. He's got 400 and some million subscribers. I've got about 5,000. So if you know who I am on YouTube and not MrBeast on YouTube, then something's gone haywire with social media. That's all for the show. Thanks for tuning in. Make sure you subscribe to the YouTube channel so I can catch up to Jimmy Donaldson, MrBeast. And then head over to accessipos.com to sign up for my free newsletter. It comes out every Sunday morning. It just highlights the things we talk about in the podcast and other news that I didn't quite get to on the show. And when you're ready to up your game, the Patreon community has gotten very active with the SpaceX news and with all of these IPOs. A lot of chatter in the chat rooms, a lot of interaction with the members in that community. Don't forget, you have direct access to me in the Access Club community, and you have access to a community of like-minded investors. There's a 7-day free trial. If you just want to check out what we're doing there, go to patreon.com/accessipos or go to accessipos.com and look for the red starburst in the menu. That's all for the show. Thanks for listening. Thanks for watching, and I'll see you next week. This video is not a recommendation to buy or sell any startups mentioned. Pre-IPO and IPO investing involves significant risk. Conduct due diligence by reading the SEC S1 filings before participating in IPOs. Do not invest in IPOs with money you cannot afford to lose. Thanks for watching.